Our purpose tonight is really to look at the whole area of finance and consider what the problems are today. Now, we've had an election campaign. Can anyone remember any discussion of banking problems? Right? A year ago, what was on and making all the newspaper headlines? A Royal Commission. What's happened? Zero. Right? We're kidding ourselves. So one of the things I want to do is, if we go to the first slide, please, Joel. If we run through a few ideas, just this sort of sums up what's going on. Now, you'll be happy to know these, you can pull down, the last slide has got a web address. You can pull down the slides and have a look when you go home if you want. And when there are a few slides, what I've tried to do is give a fair bit of information so you can read it later. I'm not going to read all that detail. I'm just going to pull out the main points in each slide. Right? So don't be worried about the detail, but the first one is worth looking at. Banks' primary business was non-mortgage lending to companies in 1928 and 1970. Today, they're mortgage brokers. They're glorified building societies, effectively. So where does business get its funding from? Well, small, medium enterprises do get some bank finance. The larger companies use bonds in the bond market, and they don't go near banks for a lot of their major funding. In other words, big companies cross-fund. Right? So the banking system has been in a hunt for lucrative, profitable markets. The second point is, when credit is used to finance useful new capital, if it doesn't generate the additional income flow, then the debt is unsustainable. That's pretty obvious, isn't it? Right? So if you make an investment, you expect an income flow. Okay, let's suppose I tell you that your income's doing this, slightly up. Right? And I look at the sector you're in, and debt's going like that. Do you think the sector's a good place to put your money into? Well, you can see that, but the federal government can't. I spent a fair bit of time looking at agriculture, and that's basically what agricultural incomes are, just 1 or 2%, depends upon whether you include assets inflation or not. Right? But a 1 or 2% return, and their debt's gone through the roof. We'll come back to this. The same things happen with housing serviceability. The ratio traditionally was about 4 times income. Now it's got up to 8 times income, and it varies around that. But that's a lot of debt to service from the, that sort of debt is hard to handle. But we issue it every day. Okay, debt overhang can crowd out normal consumption, expenditures, depressing demand and economies. If your money's going to pay off the mortgage, you can't spend it on other things. So what happens to the businesses? What happens to community organisations? What happens to tax revenue? Right? We'll cut our taxes. Yes, that'll be lovely, so we can pay off our debt. So this crowding out is not just about what it was talked about a few years ago. It's also about, let's suppose you've got a 4 times ratio on your debt, 5%, maybe you'll have 20% of your income will be going in to pay off the interest and 25% to pay off interest and principal. But if you go to 8 times, you're moving up to that 40 to 50 range of income is needed to service the debt. You're crowding out. So the money you earn is rapidly going into a property, which is nice to live in, but it's overpriced. Okay, that set up the scene. Thanks. Okay, let's just go back quite a few years ago. I'd say today, these are days of dashed aspirations, rising debts, and needless destruction of key capacities and wealth. Right? Needless destruction. Next slide, please. Okay, years ago, I was doing some teaching in a country school. Most parents only want 3 things, said the headmaster: reasonable work, a good education for the kids, and a decent place to live. That's sort of a reasonable thing. Would you think that's a reasonable thing for people in a society to want?
A bit of food would be good too.
Well, that's part of a reasonable place to live. There's food on the table, right? A reasonable place to live is actually a decent place to live is quite a good one. Okay, the questions of access, opportunity and belonging all come in here. So this is how Australians have traditionally done this sort of thing. Do you think that is the core sort of aspirational position that drives our political leaders?
No.
Thank you. Okay, just this one's a little bit more obscure. The 2 points, life and living are largely ignored in our policies and in our thinking. Analysis leaves out much of reality. Thinking is fragmented, and in economics, we ignore finance, and finance ignores economics. The models don't work together. They're too complicated. So if I'm standing with an economist hat on, I'll give you one set of models, then I'll give you a different set. And both of them are incomplete, inadequate, but they're the ones that drive the sort of policies that we've seen presented in politics for the last 15, 20 years. They're not working out how to meet aspirations. They're working out what the textbook says, preferably using first year models, because everyone can understand first year models, right? But they're oversimplifications. So where have we ended up? With an oversimplifying society which does not manage to address the problems that it could and should. Thanks, Joel. Okay, here's an indicator of distressed regions, and at risk, the dark brown and the middle brown are the distressed and at risk. These are by electorates, and this only came out a couple of weeks ago. The references are in the paper also if you want to follow these up, or pass them on to someone who would like to know about them. You'll notice there's a lot of distress, unless you happen to be in one of the blue zones, which is around Brisbane. There are some blue pockets. You can actually, if you go onto the site, you can actually scale this up and see what's going on locally. It's a great little setup. The other thing to remember is this is the top, there are 5 lots of 20% of electorates. So it's a relative measure. But I think it does tell a story. Yeah. Now, part of the reason why I'm sort of across some of these things is because I've been looking at rural finance for years, and as you can see, rural finance is deeply distressed. And it's not just drought and flood, it's actually debt. And in 2012, Aim Swan, with having been pushed by Bob Catter, held a meeting to discuss rural debt. We sat in a room, and there were bankers, and there was a couple of people like me, academics, and there were bureaucrats, and there were politicians. And the room really polarised. Most of the people were saying, there are no problems, move on. And some were very upset because they could see problems but weren't being heard. Right? One of the interesting things is that Curtis Pitt had a similar meeting in 2015 before we did the Rural Debt and Drought Task Force. And once again, the bankers were sort of saying, no problems. But a couple of really interesting comments were made by some bankers who said, we don't use those sort of measures anymore, talking about loan value ratios and things like this, which is basically how exposed you are. And a couple of the senior bankers just looked appalled. So there is this understanding there are problems, but there is complete avoidance of the problems, as in the last election campaign. Thank you. Okay, what are the roles we might reasonably expect economy, finance and money to do? When we could look at jobs and investment, for example. Now, you'll see on the right side, I've got a little bit of an Uber driver thing. If you click on that, you can go to a ABC, I think it was, website story where they talk about the gig economy and how people are getting nowhere. But Uber's actually more attractive than a lot of the more regular jobs because they're not getting the hours. So, hang on, if you can't get a job and you're not being paid much, how can you save? Secondly, finance. What we might hope is that your savings get some reward, they're safe, and they're used to contribute to something worthwhile. Now, most of you probably think that banks use savings and on-lend them, but that's not true, and it hasn't been true for a long time, but it seems to be this image, because the banks will get up as soon as someone says, there's a problem with the banks. I say, oh, but we were looking after the depositors' savings.
That's right. The money
Well,
doesn't exist.
well, it's actually even more fun than fractional reserve now, because we won't go there because it gets a bit obscure. But basically, the banks have an ability to generate credit at will. Okay, purchasing power of money for consumption, home ownership, and external purposes. You all know there's no inflation in Australia anymore, true? Have you heard that? Have you heard that? Yes. Can you tell me why it's not true? Sorry? Houses, right? The number of times last year I heard someone say on the media, we've tamed inflation, when we've got the biggest asset bubble ever. This is worse than the 1890s. The 1920s were more government debt because the households didn't really have much mortgages. The financial system, I was going to try and scare you tonight, but I didn't think that'd be fair. But if I had shown you the graph I'm talking about, you would be scared, right? So this is the general exhibition version. But we have this denial of unprecedented historical levels of debt. And yet we think everything's wonderful, or at least some people do. Okay, the final bit, we've got multiple failures. And I'd suggest two things. Much finance is not fit for purpose. One of the things you know about farm incomes is they fluctuate. Agree? It's the most volatile in the world, both in terms of production and in terms of income. So if you're getting this volatility, what does the bank do? It demands regular principal plus interest repayments, month by month or quarter by quarter. And if you can't meet them, you've got problems. You've got problems. But was the product ever fit for purpose? Well, why isn't anyone looking at these things? If I know your income fluctuates and I say you've got to pay me back regularly, there's a risk there. I should see that risk. There is a risk that you won't have the money at some stage, particularly if it's early, right? But you're then in trouble, not because you didn't try, because the crop got ruined, or the prices fell, or hailstorms came, or whatever else it was, right? So if there's a risk there and the bank has ignored it, why is the product still being issued? Okay, we have a debt dreamtime which has been building for decades, and there are imbalances. Now, the first time the Senate picked up on rural debt problems was 1994. I think David Woodley was one of the senators there, and I talked to him a few times, and they put out a report. And they had a lovely introduction to this is the sort of problem, and it was on rural debt and things like this. Then they had a very thin middle section, which had no figures. Then they had the policy implications, right? Their advisors, basically, the senators were trying to get more information, but the advisors couldn't find basic information, which actually does exist and did exist, but the system managed to come up with a very weak report. Last year's Financial Services Royal Commission did notice some rural debt problems, didn't it? Did it actually do anything about them? The one statement I think the Commissioner made very well was that if someone is trying to pay off a debt, I'm not getting his words properly here, but this is the idea. If someone couldn't pay off a debt because of problems that were none of their responsibility, events beyond their control, what should we actually be doing here? What's the moral issue? And what's the economic issue? Right? Because if you needlessly penalise and then bankrupt people who are actually productive, your society's going nowhere. Treasury initiatives, Commonwealth Debt Roundtable, I mentioned that. I put a paper on rebuilding rural Australian finances. I was also on we had a debt roundtable with Curtis and the task force which was set up, which reported, and the report's sitting there with some recommendations. The minor recommendations have been picked up, but the major ones are still ignored. And we'll come back to what they would be. So problems have deepened, especially income and debt problems, and they've spread. But the delays, denials and deceits have been ridiculous. Thank you. Okay. What I'm suggesting here is that we're actually at the dangerous end of a debt dream time. stress fundamentals are going unaddressed. And this is around the world. We're actually pretty lucky. Right? 2007 was the opening act. It started, as you might remember, we had a bank in New York go broke, a couple in the UK go broke, and the financial system froze up by 2008. And we then had governments helping the banks, yeah? By buying up, issuing government debt to buy up dodgy commercial debt. Is that a smart move? Well, it depends if you could sell it back, and they have sold back some of it, but the question is, if the debt was dodgy, why hang on to it? Why not work it out? Why not reconstruct it or write it down? Why keep dodgy debt around? The situation at the moment is we're getting towards Act 2, building towards the climax. Things will get quite nasty. They already are nasty enough in some places, but if you look at the pattern of these sort of crises, it's gone on unaddressed. It's not going to get any better till something major happens. So, yeah, and we'll talk about the sorts of things that could happen in a second. The timing of this, as we've had property fire sales, loan defaults, depressive economic conditions, needless destruction of wealth, and this is going to continue, as it is in the rural sector still. Right? The interesting thing about the rural sector is the Rural Bank acknowledged before the Royal Commission that they knew in, I think it was 2006, that they had a debt deflation spiral underway. We'll go into that phrase in a moment. Basically, you had debt rising and assets were falling. They were building towards that already at that stage, but they managed to push the price, the assets up further, and then it all came peaking and turning over. So the rural cycles have been pretty severe, and there have been other cycles too in the cities up the coast and Western Australia, and some suburbs around some cities, but not much around the cities yet. Okay, from peak, how much do you expect asset prices to fall? We'll go for 10% from peaks enough?
Which city?
Any. This is global. This is the general sort of pattern you might get.
70%.
70? That's possible?
30.
Sorry? 30?
Sorry, 70% of the rise, I meant. So
Sorry?
70% of the increase in
No.
prices, so say 30%. Yeah, 70% of the increase from the last.
Well, that's so you go back to the 30.
Yeah,
You're more right first.
Oh. On the other hand.
Okay. Next one, please, Jill. If we look at the timing on this, there is a cycle to this. There's a whole lot of theory behind it. If you want to come along international economics, that's part of it, as you'll see. Again, I've thrown a bit of this in, but it's a predictable thing. It's because of major imbalances it's a balance sheet problem fundamentally. Balance sheets get out of kilter and people make no effective actions to fix it, and so they just keep getting worse. And when it actually all goes together, then there's no stickiness around. It's a collapse, and that's what we don't want. And it's avoidable if you start working on doing something. But if you just sit around, right, you're going to have serious problems. But looking at the timing of this, the cycle is normal times, then crises build as liquidity falls differentially, markets don't work normally, collapse threatens, the subprime crisis then comes in, fire sales worsen the depression, and on it goes. The yellow figures are what happened in the rural sector. Right? And you'll see that 2013 fire sales came in, and you may have seen things like Charlie Philpotts on 60 Minutes. He was foreclosed on, all this sort of stuff. Part of the basic problem was the bank mixed up their addresses. Right? There are quite a lot of serious problems, some of which, some of which are horrendous, some of which are incompetence but still horrendous, and some of which are understandable. Right? But let me put it this way, the Commissioner last year didn't reveal much new, really, if you'd been looking into it. What he did really reveal was just how creative the bankers have been. Now, yes, creative. Now, one thing I should say right at the moment, Bankers, when I use that, is a generic term. I'm not talking about individuals. There are some very good bankers and some are working very hard. Unfortunately, the system and the bank mentality as a whole is not particularly constructive to change. You might remember the director of the Commonwealth, CEO of the Commonwealth Bank, said he knew what he should do in about 2015 with brokers and all this sort of stuff, but he didn't think the market would allow it to happen.
Well, you get $60 million a year. I mean,
Yeah,
who cares?
But anyway, but what you've got is people who are actually a lot of the time decent people in situations where they don't make decisions that they think they should. And this is also true in Parliament. There are people who actually know some of these things and they actually think we should be doing something, but they can't get traction. Okay, if you look on the right side, there's a 7 in green. There's a 7-year lag residential cycle in residential land is my suggestion. Right? Now, I actually put this slide together back in 2014 because I was trying to convince a couple of meetings. One was in St George and another was in Winton, and there were a couple of others in between as well. But ministers were there, the media were there, and advisors were there, but no one wanted to know. Right? And I got a bit frustrated and I thought, well, I'll just put in the residential, and I'm sure they'll want to know about residential, but no, it all just flies straight over. You might notice then that subprime crisis in residential is due about now. Right? It could be a year earlier, it could be a year later, but it's something like this is happening all at the moment. And you'll see, you might think, well, I'm getting a bit far advanced. Hang on a sec, there's a couple of slides which will drive this home. Next, thank you. Okay, if you look, the textbook figures and the empirical examples are from peak price. You'll get a 50% drop, 30% either direction. If you're lucky, it'll be a 20% drop. If you're unlucky, it's 80%. And in some of the Japanese experience, it's over 90%. So if you had $1 million unit in Japan, you might have ended up selling it for $200,000. And of course, if you had a $500,000 debt, which was, you thought you were pretty well off to start with, you've lost your money and the bank's after you for another. Okay, so when I first saw that, I thought, yeah, it's a bit much. But the more you read, and it happens, as you said, places do vary. There are some areas, the places that tend to be worst affected are the one where land's constricted because of natural features, like Sydney Harbour, for example. You would normally expect places with open plains like the north of Melbourne not to have those problems, but Melbourne seems to have made its own problems. We'll wait and see what happens. Western Australia, post-mining boom, they've been on TV saying prices in a lot of regions have fallen 50%. Right? I was out at Roma last year and I was talking to a motelier there. And he said, I bought in here in 2015 and I've sold, and we talked for a while. And I said, what sort of price? And he said, well, I've dropped half my money. And I didn't prompt the price. He just said, well, the selling price was half the buying price 3 years later. Right? So he's done a lot of money. He's going to go back to the Gold Coast. He'd worked hard. He thought, I'll try something different. He bought what looked like a good business deal, but he's ended up losing half his investment. Okay, so 30% variations either way. Now, this little line in green is an interesting one, and if you click on that, you'll get the reference if I've got the slide working properly. UBS, which is a serious bank, estimates that about 1/3 of the value of residential mortgages booked at $500 billion are liar loans, fraudulent paperwork. It could be fraudulent because it's incomplete. It could be fraudulent because people have thrown in numbers just to get the thing through the system. It's basically the details are wrong. They're high-risk loans, right? The actual term from the US is the liar loan, but just think of them as high-risk loans. Okay, now, if that's, just think about if 500 billion loans, what's that say for the potential solvency of the banks? Right? Now, it's not going to happen that all the banks are going to go crook, but some could. Right? You don't know where it's spread. You don't know which banks have got the bad stuff. But once it gets that serious and the politicians are running around saying, well, we must have something beside finance to talk about because, they didn't want to talk about finance, or they didn't talk about finance. They didn't talk about any of these problems. And, the other thing is, why should you then, if you know they're liar loans, why don't you start fixing them up? Why keep all these dodgy loans weighing down your balance sheet? Right? Now, banks, and a number of bankers I know do this very well. If a loan gets in problems, they will write down some of the amount owing, put it back on a sound basis, and move on. And it can be done. When you get that much, as in terms of potentially dodgy loans, you can't do it by yourself for the bank. You actually need some further assistance, and you need a reconstruction board, which is historically what we've used in Australia. And also a development bank comes in at this point for helping to restructure, but that's not actually the main purpose of the development bank. But the reconstruction of bad loans should be a priority. And it can be done, and it can be done so that you keep yourself with asset prices only falling by 20 or 25%. Right? Sydney and Melbourne are down now over 10% in a year or so. Next, please. Okay, this little graph, 1994, you'll see that the index for average debt loads and land values were pretty close. And up till 2001 or so, they sort of hung together. But you'll see around 2004, the blue line rockets upwards. So then it comes up and the figures ran out at 2011. You'll see debt figures in the brown. How debt rose in 7 years or 8 years from about 200 to 500 on the index. In other words, 2.5 times price. And the land values went up, and then the land values came down, but the debt stayed up. Right? Now, one of the things which was really interesting was that the Queensland government used to collect figures on debts and things like this, and actually that's where the information comes from, some of it. And also Bush Agribusiness has done some stuff. This is the beef area. So the debt came down, but where's the debt at the moment? If we go to 2015, as part of the debt task force, as part of the northern, let me slow down. On the debt task force, we're up in Normanton, talked to the Gulf cattle producers. Their survey showed debt at the big D at the top and land values at the LV in the middle, right? And so you'll see there's a drop from peak in land values from 500 to 300, so that's 40% down. Right? Now, you might also see a little less in there. Now, there was a special sale, which I was told about after breakfast, quietly, which had happened, and one lucky farmer had managed to buy an expensive property, but they had got very low interest. So this is signalling the market, potentially. Right? Anyway, reconstruction of debt means you move down to something which is back towards the land value. Right? That dropping blue line is where the bank would write down the debt. And it can be done in a way which de-risks the bank. Right? It's got to be there. We're not going to go into the details, but there are sensible ways to do it and there are silly ways to do it. We'd like to do something sensible, I suggest. Okay, so thank you. Okay, because I've been looking at this for a while, back in 2014 I put a paper together on rebuilding Australian rural finances, and also there are a couple of other things we did, as you'll see. The messages are the main things we want here. And I suggest, policies that incubated problems won't solve them. We've had 40 years of the same policies, and they've built up a lovely debt bubble. So we're going to keep the same policies under the new government and build it up further, are we? That was the spectacular contribution of the Prime Minister's launch. That we're going to 5%. We'll come to that in a minute. Okay, we have an extraordinary cycle underway. These things only happen when things get badly out of kilter, and it tends to be every 90 years or so. So last time was the Great Depression. This is the long drawn out, but still very depressed world, right? Okay, we need alternative financial arrangements. We need better organisational arrangements. Development bank objectives and orientations need to be looked at, and reconstruction processes and objectives are important. That's the detail if you want to follow up, but the 4 points are really what that slide's about. Thank you. Correcting market failures, we need alternative financial arrangements. How can we do these? Products fit for purpose is a good start. Going down to the bottom, not to the bottom of the third one, development bank establishment. We need to build a funding basis for neglected national industry capacities. And debt reconstruction, if the relationships are unsustainable, if your loan won't work out, why prolong it and not start saying, let's try and fix it, right? And that's the idea of reconstruction. Now, at the time between Qatar and Xenophon, they actually got a bill into the Parliament in 2013 to do these things. And it went through Senate review. It was a legislative bill. So what the committee had to decide was whether they liked the legislation. A number of people just ignored the whole thing. But basically, there was no real criticism of the ideas in the bill, but they decided they didn't like the bill. Right? So I suggest we could dust that off and have a look at it. And with changes, we could do things interestingly. Okay, problems have worsened for the last few years. So when will we be woken for our dream time? Next one, please, Jill. We need to rebase our actions, and rebuilding viability and vitality down the bottom require more than superficial tinkering. At the moment, we seem to have lots of tinkerers. They're wasting people's lives. Thanks, Jill. Okay, what can we do? Next, please. Okay, if you look on the left, there are things like denial, which are damaging. Restorative is honesty. We can keep overlooking the key contributing factors, or we can recognise the things that particularly those beyond the control of parties. At the moment, we also have an all your fault attribution for failure. Oh, you're the borrower, you did it wrongly. Right? Or you're the banker, you did it wrongly. We've actually got to get towards shared responsibilities and fix things up. And we can keep going. Okay? The way I sum it up was we need to help each other well. Next, please, Jill. Okay, underlying situations and dynamics. If you talk to an analyst, these are some of the things I suggest that you ask them to pay attention to. Things like savings and debts and incomes and expenditures. And actually say, well, how are these actually working out at the moment? If you can get someone to look at those things, you're streets ahead of the advisors to the Prime Minister. Thank you. Okay, areas for actions. Government debts, Queensland Government. The link, direct issue, Queensland Government, 2017, on The Conversation, I put a little article, because I've been looking at state debt since a former Premier and who was also a former Treasurer said they didn't actually know what the state debt was. And so I've been looking at that for a number of years, and it actually wasn't going too bad in the last state election, but they hadn't done the figures. Read the article. It's the green link will get it to you. The key point in that is that Queensland debt is paying an interest rate of 5%. Coupon value of 5%. Now, those bonds are then sold through the market to people like bankers who need liquid capital, which in case they need to move it. And so they then use that to lend to people at 5% or 4%. Now, meanwhile, if you're getting a deposit in the bank, how much are you getting? 1 or 2, or 3 if you're lucky, or 4 if you want to take a risk. So some of you may remember that the bonds used to be sold through the banks directly. I remember as a kid, you'd walk in and the Commonwealth Bank would have up on the wall, buy electricity bonds and all this sort of stuff. Why not do it again? The Queensland Government could be paying 3 or 2%. You'd be probably pretty happy to get 2 to 3%. So they halve their interest bill. I wouldn't say they sell it all this way, but they could sell a proportion. If you sold a third of the Queensland debt that way, you could save 600 million. So there are things here, environmental stewardship. Instead of saying to farmers, you can't do this and that on the farm, why don't you start paying for services and get them to fix things? That's the idea in environmental stewardship. Mortgage debt stress, these two are worth looking at. We need to avoid fire sales and disorderly workouts. So we need reconstruction. We also need a central bank with a facility which can help the process, because banks haven't got the reserves to do this on their own. The central bank has to be part of the story. And we could keep going on. Public Development Bank, if you're building a dam, and it's going to be a big dam, which you won't need for 50 years, you're not going to have much income for the first few years, are you? So if you borrow with a standard debt finance, what's going to happen? You're going to pay for an expensive dam with no income, so it's going to come from general revenues, right? Why not have a payment scheme which fits the purpose, right? It's a needed asset. Industry development banks, at the moment where there's high risk, you need to either have a low interest rate approach or a high interest rate approach, depending upon what you need. Okay, we could keep going, but we've got to keep moving. No time like the present for action. We're almost there. Next one, please. So of that list on the agenda, of this one, this is really for reading. Scott Morrison launched the campaign. Notice neither the different reporters, it was not clear what he was trying to do. I think the comment in blue is the critical one down the bottom. In a market where at the moment house prices are still continuing to fall and the sort of 1 to 2 year outlook is reasonably uncertain, I'm not sure that encouraging a cohort of buyers without an established credit history to take out loans at a high loan value ratio is sort of hugely sensible. The lady, Sally Auld from JP Morgan, is trying to be nice. She's really saying, what a twit, right? What you're asking to do is, it's the phrase I used up the top, it's basically financial teleportation. Here you are, you can't afford at the moment, I will teleport you. Your income hasn't changed, your savings haven't changed, but I'm going to guarantee you first of all, then it's going to be a loan, and now it's for this many people and all this sort of stuff. I mean, it's actually sad more than anything. Thank you. Okay, here's your challenge. What are your preferences? What appears likely if nothing's done? What will be your response? And what action interests you where you might do something? Thank you. 7 principles. Financial crises are complex, but skilled interventions can make a real difference. And those principles, I'd suggest if you're talking to any policymakers, you might ask them to think about those sort of things. Or if you're talking to a banker or a friend who's, or a lawyer even. There's lots of people who could actually think about this stuff. Okay, Rba Charter. We're lucky in Australia that it's a public bank. Most central banks are private banks, right? And also, you might notice the third one, the economic prosperity and welfare of the people of Australia, is in their charter. My suggestion is, if you want to read the detail, that basically they've failed to meet their charter and that there needs to be some retuning, right? I'm not saying they're not people who are trying hard, but they've used the tool set which led to the problems. We now need to get them to pick a tool set and an idea set which will solve the problems. And they can do it. And they're already starting to think that way, but it's too slow. If you really want to get excited, look at that. Banking crisis, exchange rate crisis, default crisis, and output or depressed economies in the middle. That's the general pattern of financial crises. They've been around for centuries, right? We just happen to have a fairly serious one at the moment. If you want to read, including some hot links you can follow up on. And finally, up to you. And right down the bottom, if you just go back to that last slide. Anyway, when it comes up, just the last slide, ruraloz.net will give you those slides if you want to pull them up on the internet. Okay?
Thank you.
Thank you.